Welcome to the Rule Selection Private Equity Podcast. Joining us today is Jeff Wigle, the Managing Director at Banyan Capital Partners, a low to middle market private equity firm located in Canada. Today we're going to dive into data, we're going to dive into first institutional capital, into portfolio companies, Jeff's experience of being a chief exec and what he's learned from that, and how they are leveraging and doing the research into how to improve processes, systems around data implementation, both at the firm level and at the portfolio level. Let's dive in. Jeff, if you can share a brief insight into you, please.
Yes. I started my career as an accountant with Ernst & Young in the 1990s, went through the articling and the designation process, and quickly moved out of accounting and joined an investment banking group here in Toronto called Arenda Corporate Finance. Was with that group, really raising capital and selling businesses in the middle market for about 4 years. We sold our business Arenda to Ernst & Young. And so I went back to Ernst & Young now as an investment banker in the early 2000s, decided that the boomerang wasn't for me, and left the sell side and joined the buy side with a group called Richardson Capital out of Winnipeg. And started my private equity career in the early 2000s. Early in my private equity career, we invested in a bar soap contract manufacturer down in the US. Business didn't do well out of the gates, and so we exited management. And at 31 years old, I was asked to go down and be the CEO and turn that business around. And so quite a life experience moving down to Cincinnati when I had a 1-year-old back in Toronto with a wife. And but fortunately, with the help of a lot of good people, was able to build that business back up, replace myself with more competent management, and come back to Toronto. And it was at that time when I came back to Toronto, a asset manager in Canada, today the largest independent asset manager in Canada, Connor Clark and Lunn, was a public markets group, very successful in managing institutional and high net worth money in the public markets, and looking to expand their business into the private markets, and wanted to build a private equity group internal to their organization. And they had a lot of exposure with private equity, like the risk return profile, did not like the short-term, what they considered and what I considered the short-term nature of private equity. And we're looking to build a group that essentially had the ability to invest money and manage businesses for the long term, and not have what we would traditionally look at as 10-year cycles of money. And so I believe that that was a unique and differentiated strategy at the time. I also was of the view that if you have a good business, and the business is generating returns for your investors, why would you sell it? If you sell it, your investors need to pay tax on it. They'll get their money back, and more oftentimes than not, they're going to reinvest the money back into the asset class, which, on a risk-adjusted basis, may be the wrong thing to do. And so I came over to Connor Clark in London in 2008, and I was tasked with figuring out how to raise money from investors that doesn't have a 10-year finite period, how to build a track record so that we could actually build a business around this idea, and then attract people to come work with us. And so it was a slow build, but 15 years later, or 16 years later, we have 8 businesses in our portfolio. We have in Canadian dollars about $350 million invested, and a couple $100 million of dry powder, and here we are today.
Excellent. Thank you very much for that insight. So what's one mistake that you see private equity firms or portfolio companies making, and what would you suggest to correct?
Yeah, it kind of ties in with the evergreen model. I think, if you have 5 years to go find a business and then 5 years to invest in a business, it's a very short period of time, and you have an investment thesis. And if you need the business to have pure earnings to sell it for maximized value on the back end, you really don't have a lot of time to transform the business. And so what I see more often than not is people rush their investment thesis. You buy into a business. From the outside, you think you understand all the mechanics of a business, and we're generalists, so we don't specifically focus on one industry. And when you get into a business, you think you understand it, but it takes some time to understand what the nuances of the business. Oftentimes, we're the first institutional capital, almost always, into an investment. And so there is typically new blood that comes into the business alongside us, a new CEO, a new CFO, and it takes time for those folks to acclimate themselves, really understand the business. And if you push too hard, a couple of things can happen. One is you can make some mistakes. Two is you can break culture. We're buying into good businesses, successful businesses, and trying to evolve them. And you need to be mindful of the culture. And so, circling back to your question, what I see oftentimes is people are jamming assets together. People are taking very short-sighted views on how they're going to create the value. And 2 or 3 years after you're into an investment, um, you really kind of stick your fingers in the holes in the dam, as opposed to trying to build long-term value.
What are you guys doing to protect that? Are you taking longer term hold periods? Are you playbooking it? What have you done to protect yourselves against that risk?
Yeah, so because we've made a number of investments and seen a lot of experiences, when we come into an investment, really our first couple of years is really rebuilding the foundation. If we have a vision, if a business is generating 100 million in sales and has one location, and we say in 5 years we want to be double or triple that and have multi locations, we playbook that out. But recognizing we need to work on the foundation, we need to have the right people in the right chairs. Oftentimes, systems have been underinvested in, processes are outdated, and so you need to work on upgrading your systems, evolving your processes, such that you get to a point where you feel like the foundation is pretty secure, and you can start to take risk against that. And so we're very focused and disciplined around not buying into a business, and 3 months after you buy it, you see a shiny object in a different location, and you say, "Hey, that could be synergistic to us." And on paper, it looks quite synergistic, but we don't grab it, buy it, and jam it with our platform, such that you create a bit of chaos. You don't really know the people that are at the table. People who are new to the business haven't really got themselves organized. So we are fairly disciplined. And again, to answer your question directly, we are longer term focused. We have businesses in our portfolio that are 13 years old, and we're on our third 5-year strategy plan with them, and have no intention of selling those businesses. And so we do have the ability to be a little longer term focused and make investments in the business that take a little longer to pay off.
So you referenced in your intro about 31 years old, brought in as a chief exec. I mean, lots of things we could talk about with regards to that, but specifically, what did you learn from that scenario of actually leading one of your portfolio companies that's benefited you now as an investor?
Well, I think, as a general rule, everyone says people matter, and people are the number one asset in a business. And I think it was a real lesson for me around having the right people in the right chairs. When we had initially invested in that business, we made a bunch of changes. We made some bad decisions on the changes we made in that business, and we put the wrong people in the wrong chairs, and we probably left them there too long. And so, um, and on conversely, when I came in and found some new people to run the business started to flourish because it had the right people. So the biggest lesson I learned is making sure you have the right people working with you, and that when you're looking at an opportunity or building a business, in my opinion, people matter more than the asset.
What did so obviously good and bad people, we can all make references in our own mind. What did the good people do when you brought them in that allowed the business to grow?
So what did so I'd say, when I look at that situation, I think it's clarity of what the business is, where the weaknesses are, what you need to work on, consistency in approach, transparency with the board, with your people, with your stakeholders, um, is incredibly key. Um, and so, when I look at some of our great people, I would say they walk the walk, they talk the talk. They're very easy to understand where they want to take the business. No hidden agendas, lack of politics, if you will. Hardworking, smart, diligent would also be, some characteristics of our high performers as well. Something maybe indirect is alignment, ensuring people that if our investors win, that the people who are building those businesses win as well. So making sure you have the right compensation programs, ownership programs in place that drive the behaviors that everyone wins, if you will.
Okay. So you guys referenced like kind of first institutional capital. Um, that transition from being founder owned, owner owned, I suppose, is quite a difficult one for a lot of private equity firms and certainly the actual portfolio companies. Just diving into the data side of things, how are you making that transition from founder owned business, private equity backed business to leverage data driven decision making?
Yeah, it's a huge theme across our entire portfolio. Oftentimes, when you buy into a business, there are a few individuals in the business who are very good at what they do, and they have a lifetime of experiences to understand what right and wrong look like, and it's in their tummy, if you will. And more oftentimes than not, they're right and they're talented, but it's very hard to scale a business on that basis. If you want to bring in junior staff or less experienced staff, how do you pass on that knowledge and how do you organize yourself in a way that allows you to double or triple the size of your business? And so um, you need to bring in systems, you need to bring in processes, you need to bring in data that allows you to better understand what right and wrong looks like, and then be able to extrapolate all of the successes across the business for growth, if you will. The challenge is, so first it's people, is you have a really small amount of people that really generate the lion's share of the goodwill in the business, and you want to spread that out a little bit and be prepared to scale. The other is systems. So systems are very expensive. The people that you need to put in systems are hard to find, and again, very expensive. And the process is really time consuming. If you're going through a systems upgrade and a process upgrade at the same time, you can be very inward focused. When you're inward focused, you're missing out on opportunities in the market. And maybe you're not as close to the market and seeing how the market is changing. And so it's dangerous. And entrepreneurs, when they're selling the businesses to us, typically they're later in life. They don't want to invest the money. They don't necessarily see the payback. They understand the business well enough. And so for their needs, they don't need to upgrade their systems, upgrade their processes. For us, we're paying a full market price for the business. For us to generate a returns, we've got to take the business somewhere. Often we've got to scale it. Well, to scale it, you need the right foundation, and often that includes systems and data. And so, in almost all of our businesses and our newer investments, we're spending a huge amount of time investing in the business, investing in systems, investing in people, multi-year projects around pushing the technology into the 21st century. The hope is that by doing that, you're going to be able to generate all sorts of data, customer data, supplier data, margins, where we're winning, where we're losing, and with all that data, be able to make better decisions, generate more profitability, exit areas of the business where you're not particularly doing well. And so that, anyways, I'm rambling a little bit, but that really is a very common theme across all of our businesses.
95% of all business problems are people problems in disguise. Over the last 6 months, I've been intently writing a brand new book, all focused on the experiences that I've collated from some of the top private equity firms and investors on how they interview and select top executive talent for their portfolio companies. To join the waiting list for this book and receive a free copy for the first 100 added, please check out the show notes and get your name on the waiting list today. So, every business is going to be different, but how do you differentiate where to start with the generation of data outside of what I regard as the typical private equity side of we want to know about the finance and reporting? What decision making process do you have to go? This is where we'll begin.
Right. So one thing we've been doing in the last 18 months with some of our newer businesses is there's a consulting book that we are disciples of is called, just looking, Ions of Profit in the Sea of Red Ink. And so um, our perspective is that over time, businesses gather losing activities. So within a business, in the 80-20 rule, 20% of your revenues generate 80% of your profits. So we find that to largely be the case. But we also find that with ambition, people start bringing revenue to bear bringing activities to bear that don't generate profit. And so sometimes you find an executive team saying, wow, we're working so hard. And you say, well, why are you working that hard? Why don't you reduce the size of your business by a third and you'll generate more profitability? People don't like to give up business. People don't like to go backwards. So being able to prove out on a very manual process with very manual data that, hey, when you look at your customer list, you look at your product list, you look at the services that you're providing, and here's where you're making your money. And we do that. We use our younger people here who are well versed in Excel, and we manually grind through the data that's available with their limited systems and say, this is what the state of the business. This is where you're making money. This is where you're maybe not as happy with your profit margins. And what are we going to do about it? So it's one thing to understand. It's another thing to how are you going to pivot with your customers? Are you going to raise prices? Are you going to reduce services? Are you going to change your approach? Um, and oftentimes that creates a bit of a bright light with the executive teams and the other owners of the business, because we don't own all of our businesses 100% around, hey, this is really value add. We can't do this on such a static basis. It needs to be dynamic. And therefore, we need to have robust systems that we could be reviewing and identifying gaps in our data on a regular basis. Well, you can only do that if you have technology. And so typically we start with a very manual process. There's a proof of concept of why it's worth the efforts, the investment. And then we move forward into actually bringing technology into the businesses.
So I can envisage when you try and make these changes, I'm sure like every private equity firm, you just go in there and guys, we know what we're doing. Just listen and we'll all play ball. I'm sure you get lots and lots of pushback. We've always done it this way. What are you guys doing to kind of change? And you referenced hearts and minds earlier, and that cultural aspect of first institutional capital going into a business and all of this. We're going to use data. We're going to change everything you've done. We might be getting rid of some of those clients that you love. How are you driving that?
Yeah, there's lots of resistance for sure. Change is hard. Change management is super hard. And you need the buy-in of your executive team. Typically in our executive teams, some of the team will be new to the business and some of them will be historical, but you need the buy-in and you need to work really hard with the executive team to get 100% buy-in. Um, we don't want to necessarily change the culture. We want to evolve the culture. And so we look at and manage and test where our culture is, how, what's the engagement of our workforce like? What's the engagement today? What's it like in 6 months? And so we are very careful to try not push too hard to break businesses. Because again, these are good businesses. They're not businesses that need to be restructured. They need to be evolved. And so carefully is what I would say, with the buy-in of the leadership team. And most of our CEOs, to the extent that they're new, have some experience in change management and are very emotionally connected to the organization or conscious of it, to how hard we can push and not push. But everyone likes the idea of performance management. When you get into a business that's 50 years old, that's never really had performance management, it's difficult.
Yeah, I can imagine. You mentioned a lot of technology and systems. What are you guys leveraging in order to help you with the data generation, data exploration, and data implementation?
Yeah, a couple of things. One is we have a few go-to IT consultants that we've used before. You gain confidence in their abilities. They understand our approach to technology implementation and risk management. Some people want to drive really hard because they have a certain risk tolerance, and others, maybe less so. And so we definitely utilize outsourced resources that we're friendly with. We do have a virtual bench of IT executives who are looking to get into private equity backed businesses. So we've placed a few people that we've developed relationships with into our businesses. We have one business in Oak Creek. A gentleman had an idea. He wanted to go to Calgary and live his life. And he went in as an IT specialist on contract for 18 months 5 years ago, and we've got another 5 years of work for him, in that business, and he just took to Calgary, took to the business, and is now like a vital resource in that business. So yeah, using outsized contractors, working hard on knowing people or finding people who would work with our businesses. And I would say on the hiring side, our younger people here, we have more of a bent towards individuals who can be comfortable managing big data. And so some of our younger people are incredibly gifted on software management, data management, and we're not shy to offer up our resources to our executive teams. Oftentimes, they'll go in for 90 days and work with them on almost a secondment basis to work through data. Think about how they're going to evolve the technology within the businesses.
How are you leveraging artificial intelligence and other similar types of technology to help you with this?
So on this particular issue, I'd say we're at the very beginning of artificial intelligence. We are working with it within our shop. We are looking at how we can use it to manage data. We are looking at it on how it can help us with our software internally. Within our businesses, I'll take us on a tangent just for a second, but you can I'll get back to your question. So we have a business called Rack Attack. Rack Attack is a retailer of cargo boxes and bike racks in North America. We would have 50 stores. That business was built by a founder, and a lot of the technology is proprietary or custom built, if you will. And we have people would be surprised to know we have a fairly sizable technology team there because everything has been proprietary. We may move away from that in the future, but for now, that's how the business was built. As we were evolving the business, we ran into some coding issues, and our software guys for about a month could not figure out where there was a coding issue. So we put our software into AI and asked AI where the issue was, and it came back in less than a minute and showed us where our error was and fixed it for us. And so that's a real example of, it saved us tens of thousands of dollars in time to have somebody just show us where our coding error was. That's not your question. Your question around how we're using it. So that was a one-off, and we'll continue to evaluate AI. We have a number of distribution businesses. I'd say half of our businesses are distribution based. They would have a huge customer base, and they would have a fairly sizable product base that they would or catalog that they would be selling to customers. Not all customer has the same value or is in the same location or orders the same way. And so we have historically had fairly static pricing, and we would massage the pricing based on how far away you were or maybe how big your order was, to ensure that our margins were roughly consistent depending on who the person was and where they were. With today, we've got 5,000 customers and 15,000 SKUs in one of our businesses, and it's too hard to do manually. And so, our perspective is AI is going to help us forward on that basis and will help us essentially have dynamic pricing. Every customer will have a different price or a different way of looking at how they order with us, and it will be based on quantity, price points, composition, and distance.
Not only am I the host of the Private Equity Podcast, but I'm also the founder and managing partner of Raw Selection. Raw Selection is a private equity specialist executive search firm with two divisions, one that focuses on portfolio, C-suite executive hires, and one that focuses on private equity direct hires of the back office and investment deal professionals to the industry. Alongside the podcast, we're passionate about giving back to the industry and giving people information that they can run and utilize. One thing we do regularly every year is we run salary reports on accurate and live data of people that we've interviewed and people that have shared their information with us. So if you're looking to compare your current compensation or your compensation for your next hire in your private equity firm or portfolio company, then please check out our YouTube channel and see the playlist of salary surveys. So I think artificial intelligence is an interesting topic. Are you guys going out to consultants and using the outsourced process again to support you with that, or have you brought that in-house? I know it's still a new technology, really.
Again, it's early. We attend conferences. We're looking for smart people. I would say I've been shocked in the last 12 months. We feel like we're behind. So like the leading edge distributors, some of the larger ones, they've already been doing this for a few years. And there are consultants that have had a bunch of reps with larger businesses or more forward thinking private equity groups than us who have already implemented AI or dynamic pricing or other sort of unique or forward thinking technological innovations in distribution businesses. And so, um, we turn to those that have had some experience and are using them in helping them with our business. I actually feel a little anxious that we've maybe started too late to get at this, and it will continue to evolve, and it'll be interesting to see where all of this goes. But I think the best businesses already have AI in their technology, and we're lower middle market. Our businesses don't have as big of budgets or can move as quickly, but I think if you don't get there, you're gonna be at a real disadvantage in a few years.
Interesting that you feel you're already behind from a new technology and deployment. Are you seeing a lot of that deployment in larger businesses, or are you seeing it in similar sized companies? Probably more larger, I would guess.
Yeah, I would say larger. I would say, businesses at 100 to 200 million of revenue, you don't see it as much. People talk about it, but maybe are unwilling to make the massive change that is necessary to do it. We're going to do it. So we've got a number of initiatives underway. We've already moved to some dynamic pricing in some of our businesses, and I do think that we're all in here.
Are you finding there's a lot of um, are you finding the consultants that you're working with, are they bringing in expertise, training existing team members to be able to deploy that, or are you having to go out there and hire new skill sets?
Bit of both. It's a bit of both. I would say technology is part of your investment thesis or is core to the focus of your business. And some of our businesses, technology kind of sits under finance and it's a cost center. And we are of the view that uh, careful if you do that, you're going to get left behind. And so we are bringing in new talent internally into businesses. Not easy to find that talent, but we are definitely bringing in talent. And you're seeing more and more IT executives sit in the executive team than maybe 5 years ago, and we would mirror that with consultants.
And aside from the portfolio side of things, have you guys considered artificial intelligence and the uses at a private equity firm level?
Sure. So we continually test it, and we're part of a very large asset management firm, and we have access to resources as a result of that. And there is initiative on how can we use the AI to make better decisions and part of that comes from research. And so using AI for research, using AI to compile data is something we are using. I would say we're not fully bought in yet because the AI systems that we have been using, there are still errors in it. And so it gives you a good starting point with if you want to capture a bunch of information about a unique industry that you're not particularly familiar with, very quickly it can give you a whole bunch of leads. And so we use that to start. And then from there, we do our own research, if you will. And then on the data, we'll ask it to compile data, but then we'll typically do a lot of our own work to see if our work matches up with the AI. Unfortunately, we're still finding too many errors for us to be using it fully, but my expectation is it will get better quickly.
Okay. And are you using, I mean, everyone's pretty familiar with the ChatGPT as a single software platform and LLM. Are you using different platforms aside from that in order to help you with that work?
So Copilot would be the other one that we use, but nothing more than that at this point in time.
Okay, interesting. You referenced a book earlier. I'd like you to, if you can, repeat that because I think you referenced a consulting book that you're using some of the tools inside. But what are other influences that you are either reading, watching, listening to that you recommend that others check out, please, Jeff?
Yeah, so we are again, we're disciples of Vern Harnish has wrote a book called Scaling Up. Scaling Up is all about getting the business ready for the next stage of evolution. And
So almost everything we do is on the foundation of his principles, if you will. And so that is a book that, all of my team would read, and we pull out from time to time to remind ourselves of with him, he's a believer that your executive team should be reading consulting books on a regular basis to augment or create points to talk around. You might not necessarily agree or disagree. And so, over time we pull various consulting books and we all read them, and then we discuss them. Some of those that I found were good. Five Dysfunctions of a Team is a really interesting book.
True and journey. Yeah.
Yeah, that's right. Switch, if you've read that. I particularly like the book called Grit, just talking about the drive and what takes people from good to great, if you will, or which is another book. Good to Great is a book that I would recommend. As it relates to gathering information, I'm old enough that I was a newspaper guy for most of my life. They don't really exist. I find that the traditional media, it's been watered down. There's not as many good columnists, and so you have to gather your perspectives on the world and what's going on from various sources. More and more I listen to podcasts like yours. One of the ones I've listened to on a continuous basis is one called Business Breakdowns. And really, it just takes public businesses for the most part, finds an analyst who covers them, and they go into depth about why it's unique or different or interesting. So I find that's good. I just recently got introduced to a podcast called In Good Company, which I found quite an interesting listen. And then Michael Lewis, depending on what you think of him, the author, he's got his own podcast, and I follow what he has to say. But gathering information, it comes from a much more diverse, social media, internet, traditional. I try to gather it all to see how people are thinking and acting in the world.
Oh, that was a hell of a list. I think it's probably one of the better answers we've ever had from a lister. You're obviously a big reader and big researcher into how things can improve and develop. So thank you very much for sharing that, Jeff.
Sure.
So Jeff, if anybody wishes to reach out post this podcast, how best do they get in touch with you, please?
So I run a private equity group called Banyan Capital Partners here in Toronto. We have a website. If you run your web search on Banyan Capital Partners, you'll find it. There you'll find me on the team, and my phone number and my email address are there. And feel free to reach out to me.
Well, thank you very much for coming onto the podcast, Jeff. I've really enjoyed the deep dive into what is a pretty repeated subject of data, but I think we've got into some real processes around how you're using future technology, and also how you guys are driving cultural change on that. So thank you very much for making that an interesting, what is a dual subject, an interesting discussion around that. So thank you for coming on the podcast.
Well, thanks, Alex, for having me. I enjoyed it this morning.
And as always, thank you very much for everybody who's tuned in yet again for the Private Equity Podcast. If you haven't done so already, please do subscribe, be notified of the next one that comes out every single week. But till the next time, keep smashing it, and thank you very much for listening.